Good afternoon, everybody. Thanks very much for joining us here for this session, which is going to be focused on Germany, the investment opportunities in Germany. We've got a really great panel here joining us. So let's start with introductions. My name is Richard Betts. I'm the group publisher at Real Asset Media, and we run a series of 60, 70 events on hot topics, on different sectors, on different geographies, and we're here at MIPIM, as we are at Expo Real, running a full program, looking at some of the key trends. And Germany is one of the big discussions that actually has come up a lot in terms of my discussions here at MIPIM in Cannes. But let's start with introductions. Gabriel, over to you. Just a quick introduction of yourself and the company.
Yes, I'm delighted to be here. My name is Gabriel Seifert. I'm the head of acquisition of Ziegert EverEstate. Ziegert is a Berlin-based real estate company, 40 years old almost, providing innovative digitalized solution within brokerage, financing, and also advisory services, and is broadly spanned entirely along the complete value chain of real estate.
Great, thanks very much. Marcus.
Yeah, my name is Marcus Lemli. I'm responsible for the Savills business in Germany. Savills, we're a global property advisor listed in the UK and offer services around commercial and private real estate, around transactions, management, and technical services.
Great, thanks. And Tobias.
Yeah, hi. Hi, everybody. Great being here again. My name is Tobias Schultheiß. I'm the founder and owner of Blackbird Real Estate, which is a 10-year-old transaction advisory boutique with offices in Frankfurt and Munich. The last years, we mainly did office buildings, but our focus and our ideal approach is doing business outside the typical top 7 cities. And as our second business line, we do joint ventures and project developments.
Great, thanks very much. Obviously, we've all been watching here in Cannes as well the situation and the build-up to that in terms of the Ukraine and the kind of awful war and the what's happening there. And it's obviously been one of the topics here about what the influence is on real estate as well. And it would be interesting just to get your perspective. Let's start with you, Marcus, in terms of, I suppose, how international capital is seeing that, or how you think it might see that, because there's obviously a view as to whether or not Germany is then potentially a safe haven, for example, for capital. What's your sense of that? Do you think there'll be a pause in capital, or because we're coming post-pandemic? Is that what's your sense of the capital flows into Germany?
Well, we're coming really out of a time, the last 2 years, where we've seen a reduction in cross-border capital flows into Germany, and that has basically been due to the fact that it's been more difficult to transact. So I see there's a certain pent-up demand to further invest in Germany. I think Germany is preserving its status as safe haven and is, if anything, ranking higher than ever in investors' preferences. However, and we just can look around at MIPIM, and there is a lot of international capital which is simply missing and not active. So that capital will enter the German market again. So I think that we'll see an increase in activity over the next 18 months as investors are continuously diversifying their portfolios internationally.
And Tobias, have you seen any kind of pause in terms of transactions, or because it's very interesting that you're at that sort of kind of more granular level in terms of some of the not necessarily the big 7 cities?
No pause at all. The deals we currently work on, we started in December, for example. It is just more or less business as usual. Of course, we talk with our clients and the investors about what happens in Ukraine, but this does not have any impact on the transaction. They say we are down the road, we are almost there for meeting for signing. No reason to pause because of this one idiot.
And is it the ongoing stuff where there's no pause, or where I'm seeing a little bit of caution is actually new sales being initiated. So that's we've had a very strong first 2-3 months of the year with a lot of product coming to the market. So liquidity is really increasing. However, over the last couple of weeks, I've seen new sales being delayed. So that's maybe something where investors are trying to gauge exactly the effect of the market. But I agree with you, Toby. The ongoing stuff, that's just going ahead.
Is it like specific for the last couple of weeks or
yeah.
days?
It's rather the week or day issue where investors saying, let's see here, is my pricing right? Is the demand deep enough? Should I? I don't want to be seen as launching a sale into an insecure situation and then the market interpreting that I'm kind of selling under pressure or so. So that's maybe last couple of weeks where we're seeing a little bit of a slowdown. Other than that, a pipeline is bigger than ever.
Okay, interesting. Obviously, the along with logistics, residential in general has benefited over the last 18, 24 months.
50 billion of transaction volume last year in Germany alone. So by far has been the biggest asset class, has overtaken offices as major asset class, the most active asset class. So it'll be exciting to see how that goes on.
Yeah, no, that's good. And what are you seeing, Gabriel, in that space particularly? Because you're looking at that obviously purely on the residential side, and obviously in Berlin and some of the key cities. So I suppose what are the trends that you're seeing there?
Well, Berlin is a specific market. We see double-digit price increases year over year still. We had the busiest start into the year of 2022 since a very, very, very long time. I can second your impression of the market. So Berlin remains a very dynamic field for investors with no end in sight, because of course we have a couple of KPIs which are really significant to the future market development, which is projected until 2030. For example, we have like around about 40,000 people coming to Berlin year over year. We can put basically the year 2020 into brackets, where we had a slightly different development. However, the vacancy quota in Berlin, when you look into the residential, is below 0.5%, which is dramatically, and it's going asymptotically down towards zero. So,
and how much new units are being delivered to the market year on year?
That's really difficult to say, because that's verifying. I can give you the number on building permits per unit. However, there's a significant hold up of units because they are subjected to speculation or other regulations. It's like 6,000 units in the newly built residential portfolio in Berlin coming to the market.
Versus 40,000 people coming in.
That is correct. Yeah.
So there's a supply.
We can do the math there.
Yeah. And does that mean? I mean, it's an interesting one about Berlin, because that really does have the opportunity to be able to grow at quite some scale. And do you think that will continue to have, more people coming to it? Therefore, then there's more office. Therefore, there's more. Is Berlin really going to continue with this path of kind of exponential growth, really?
Yeah. Well, I don't know whether it's going to be exponential. It certainly over the last years has been exponential. We might be moving into maybe more linear growth, but I think the growth path and the fundamentals for Berlin are really, really strong, and I expect the city to continue on that growth path for the foreseeable future. If you look at Germany and the developments over the last 20, 30 years where I've been active in real estate, and there's certain cycles. If we go back 20 years, and we all have this amazing development of Munich, and this boom with Munich benefiting from the quality of life plus the technology sector at the time, the software sector, locating in Munich, and having that growth industry pushed Munich very much. And I think Berlin has taken this role over from the growth leader in the German economy, and then now building on young population, quality of life, international, being attractive for young international professionals, and then hosting the internet companies. That's really the new growth driver in Germany. So I think with those fundamentals, Berlin's on a growth path for the next years.
And is there a potential for it to be, on a par with the sort of London, Paris?
Long shot, I think.
Very long shot.
Yeah, I think London, Paris are two global cities. Especially London, being English speaking, is a true global cities, independent from Brexit, etc. London just is one of the capital cities of the world, and I think to reach that kind of level, I think Berlin is still a way to go. But it's on the move, and there's opportunity there.
Colleagues in London will be delighted with that view. Good. Yeah. It would be interesting just to drill down a little bit, Tobias, with you in terms of, I suppose, some of those sort of secondary locations, the smaller locations. What's driving the opportunities there, and are we seeing more opportunities in terms of office and those kinds of things? I wonder whether there's any sort of follow through from the pandemic and more work from home and those kinds of things, whether that's driven more growth in those areas.
When you talk about opportunities in these secondary locations, it's not opportunities like buying a vacant office building in Berlin, refurbish it, lease it at a maximum rent rate, and then sell it at an enormous price. That's not the opportunity. The opportunity in these cities is that you can get good quality buildings for good prices with stable tenants. And I'm sure you remember I told this a couple of times. I do own property in such secondary locations. Especially in the pandemic, we did not lose 1 cent due to companies going insolvent. And we even, in one property, we are let 110% because there's so much need for space. And in this city, we're the only landlord offering from 15 square meters. But normal office space lease contracts, and so that's the opportunity. Stable income compared to top 7 cities, much higher returns, and so in my view, much less risk compared to what.
And to Richard's question, is it a winner? Are the B cities a winner because of home office and people working more remotely?
For me, definitely yes.
I mean, that's something we're seeing indeed, and reflected in from investor sentiment as well, that the B cities are the winners. It blows through to residential, of course, and the development activity in these B cities. So more people working from home, and stronger need for offices in these cities, and that's really an effect of this bigger use of remote working.
And have you seen that flowing through then in terms of the locations that you're looking at, or indeed, people less demand for areas like Frankfurt, for example, because people are moving out of that? What are you seeing? Are you seeing any kind of trends developing there, Gabriel?
So I definitely can confirm that trend. We are also active in Leipzig, and Leipzig has been a entire two-city, but the development rates of prices are even comparable towards Berlin. And if you look at different projects, they are spreading around, and Leipzig is developing rapidly and changing its ways in a pace nobody could understand. For example, the vacancy quota of Leipzig is dropping like a straight line downwards. It was like around 7%. Now it's closer to 2%, which also is a massive price driver.
And so, does that mean that you're then going to see prices increasing because there's scarcity of product, and also presumably scarcity for people actually looking to rent, and so therefore there may be also rental increases? What's your sense of that?
Well, in Berlin, our core market, the market is highly regulated. So what you absolutely can confirm, the rental development in Berlin for the new build apartments has been breathtaking. We see over 50% within the last 5 years. The average rental price per square meter ranges around about €20, depending on the
new build.
On the new build,
new build.
Correct,
Mm-hmm.
correct, for residential,
Right.
which poses a lot of people into difficult situations if they.
And it prices many people out of the market, doesn't it?
Absolutely,
Isn't it?
absolutely it does. On the other hand, like the existing apartments are like more or less frozen. We see a price of like €12.80 per square meter, and of course, due to regulations, those prices are stable. And people who are losing a condominium like that, they are forced to decide whether to pay that newly built apartment, because those are the most apartments on the market to get, most likely to get, or really to move to suburbia.
Yeah. And don't you wonder? So you got a regulated market and rents, you say, around the 12-ish euros, more stable. Now what's going to happen to investor returns if you can't move rents? But inflation's starting to pick up. It's never been an issue, because with 1 or 1.5% of inflation, who cares if you don't have an indexed contract?
No, it's interesting, isn't it? And the inflation side also has, you've on the plus side, you've then got real estate often seen as an inflation hedge.
Exactly.
In some ways, but
Exactly.
absolutely, if you're in a regulated market, then it becomes quite difficult. And the same is true if you've got, rent reviews that are, for example, like in the UK market, where rent reviews are at different various times, you have the opportunity to adjust it.
There you at least have the opportunity to adjust. Yeah.
But yes, it's interesting, the indexation thing. What's your sense of that? How will that?
Well, I think there's going to be a certain increase in interest around indexation. We had the big discussions 5-10 years ago around indexing retail contracts, and certainly I expect this run for income, which we're seeing now since 5 years. The focus from total return towards a stronger focus on income, and that focus on income will now be looking to seize the opportunity to really have either indexed income or opportunities to have regular price adjustments to account for that inflation. So I think that focus will shift, certainly.
And 2 days ago, I met with a client who he sold a parking garage for a couple of weeks ago. And on Tuesday, he said he's no longer sure if he really wants this deal to be closed. Why? Because it's a fully indexed lease contract.
Okay.
And the buyer and seller both calculated with a 3% indexation.
Yeah.
This is no longer reality, it's much more. So, of course, he said it with a smile on his face, but there's an element of truth behind. He's not sure if he really still wants to sell it.
Is it, or is it? On the other hand, I don't know what his parking income did over the last 2 years, but he must have suffered.
No, it's employers car parking
Right,
with a normal it's with a normal lease contract, 20 years vault.
Ask our owners of shopping centers, and we're managing a couple of parking garages there. I mean, that income certainly has suffered with less activity and less people coming to the city centers. That's been a really tough business.
And let's pick up a little bit on the on some of the other sectors as well. Marcus, maybe just run through your sense of because retail has obviously been not very popular, let's say, for a while, or fashion.
I think
differences in terms of some.
Yeah. You're pointing to the fact it's retail. We've seen a big differentiation there. So strong demand for long, secure income in retail. Retail parks have been very popular. Food-anchored income, food-anchored retail centers, neighborhood shopping centers. So anything that has to do with providing for the day-to-day demand, it's been very much in demand, and prices have increased there. However, the shopping center and fashion-related retailing, that has really suffered in the shopping centers, and I think there's a big transformation going on there, with centers really in need of redevelopment, in need of bringing in new uses, because in the end there's still going to be a demand. It's around logistics, it's around experience, around being there, and that new demand needs to be catered to. So I think there's going to be a big opportunity for the shopping center owners that will be able to reconfigure their centers, certainly.
And what's your sense at the moment of, I mean, logistics, we were mentioning residential, but logistics, the other big winner over the last kind of 2 years.
Well, logistics has been a structural winner, hasn't it? It's not only from current demand, but just structurally as retailing and manufacturing is continuing to change. Logistics in the value chain is occupying a completely different part. Therefore, there's also more value in logistics. Therefore, also more capability to pay rents. But that ability to pay higher rents, I think, will now be very much limited. So I think it's going to be a challenge equally with the residential side to see whether and how much potential tenants have to pay higher rents just because of the increase of energy prices.
But it's going to be very interesting how the logistics sector is going to change. Also, of course, due to current political developments. In our perspective, many of those things are going to be subjected to massive changes. And also, of course, many new investments are going to be rethought and reevaluated, and might lead to a fundamental different development of that sector we have seen before.
Yeah.
I mean, it's interesting to see, obviously the discussions around, there's already a view about resilience of supply chains, because of the COVID, if you like, and the health crisis highlighting that issue. Now we've also got, the European Union talking about making a more resilient manufacturing, closer nearshoring for all of those things.
Try buying a car nowadays. I mean, so they're sold out. You can't order new cars anymore because of exactly that manufacturing chains being broken and that's limiting supply. So there's definitely big need for that.
And that's got to ultimately increase demand for warehousing space, one would assume. Just because to keep that resilient, supply chain there, you're going to have larger amounts of stock in order to service for longer. And what's the situation in, because planning, obviously, one of the challenges consistently in the German market, I guess both for building residential at scale as well? I mean, is planning a real problem in terms of meeting the demand that you've got for residential?
I mean, Berlin is a very difficult area to plan very well in advance. There might be obstacles one has not foreseen. However, investors coming to Berlin have accepted that new normal, that Berlin is special, that Berlin might take a little bit longer and may lead to more profit in the end. So that's a thing which is known and which is well accepted with Berlin.
Okay, good. And maybe just picking up on things like, hotels and leisure, are we beginning to see more interest in that in terms of, hotels, whether that's business or leisure or...
Hotel has been a sector that's completely... has to be viewed with new eyes and a new perspective, and is adjusting in a large scale. So right now we're seeing more hotel conversions than we have in the last 15, 20 years. So we're seeing hotels which are now being sold as development site for residential, for micro-living, and even for offices. We're currently selling a 250 million hotel, which is being redeveloped into offices. So there's a real structural change going on there, and that market needs to find a new balance.
Yeah, one sees hotels, one would never have thought that they would even consider that step. So of course, this is a very interesting and dramatic development.
But with that, I think over the short term, we'll see a smaller offer for hotels, and I expect that market to stabilize again.
And is there going to be transformation of some of the retail side? You know, I mean, it's interesting to see, for example, if I'm looking at the London market, that you're beginning to see some of the larger shopping centres also then beginning to put some office into spaces, or you know, different aspects.
That's exactly what I mentioned earlier, going through the different use classes, and the shopping centres indeed are being redeveloped. We're advising on a centre in a German B city, where just that is happening. Retail is going out. We're putting university areas in it. We're putting micro living in it. We're putting the retail into the ground, and lower floor, more food retailing, less fashion. So a shopping center which is completely being turned around, and I think that's going to be a big theme across many of the German B cities and B centers.
And sustainability has been one of the things that's been across every single discussion that we've had here.
Now it's even paying off with these energy prices, isn't it?
It does. Yeah. It does.
Well, it'll be interesting to see what happens, particularly in you know, whether that will drive much more renewable energy in Germany, for certain, and what that means, because obviously a lot of the cities are looking at green energy, renewable energy, and that's a big driver for them. And I suppose, looking at the cities at the moment, I mean, we were talking about the future of office earlier, and that one of the key aspects for that was that you've now got to, you know, people have to want to go back to the office in a way like they need to want to go back to shopping as well, because they could do retail, you know, they could do retail from home.
There has to be some kind of value in moving yourself and buying in a shop or doing the work in the office.
And do you think that that's going to have a change in terms of the office sector in Germany as well, that, you know, it'll need to be, you know, the offices will need to be in a vibrant area where there is much more mixed use, there's much more things to do, you know, and I mean, it just interesting to see whether that would change in Germany, because I think, if I'm right, that actually there was more, you know, people stayed in the office more in Germany than they did in the UK, for example. Yeah. Have we seen a big change?
I can maybe give a slightly different angle. So, for example, with many aerial developments, we're seeing that especially in B or C areas, we are already considering to include a co-working space in order really to move the whole office thing more decentralized. Going to the office, being more focused, meeting colleagues, meeting peers, having the office experience without having to commute like for 90 minutes one way or whatever, which is happening sometimes if you have to move to the headquarter in order really to be a part of the greater scale. So we see that development is increasing, and also that business cases for these co-working spaces are changing, so that the willingness to pay for office space in B and C areas of cities is constantly increasing.
Indeed, I mean, there's obviously everybody wants to be in a vibrant location in order to make best use of your time and have some leisure time, do some shopping, do your work. That's around location. The other thing we're seeing is that the configuration of the office space is changing. There is a much more flexible approach and flexible offering of space. So while the number of individually assigned workspaces is reducing, the space for collaborative working is increasing. So one of the questions I'm asked often is, so with all of this home office thing and remote working, are tenants leasing less space? And I always give my answer is twofold. The small and medium-sized tenants are not reducing their space, they're just reconfiguring their space, less individual office, more meeting rooms, more bigger lounge areas, because it's all around a meeting. Because doing your boring work from you can do that from home, and you do that better from home than being disturbed by colleagues. But the office is around communication and collaboration. So the small, medium-sized tenants are not really reducing the space. What I do expect, and we haven't seen it in Germany yet, that the bigger corporates, they will actually reduce when they start moving, and they haven't moved. Many of the corporates have just sat tight, pushing on the decision. So I think that effect still is to come. We're speculating now, but I would expect that net office demand will reduce.
And do you see growth in, there's a lot of focus on alternatives. For example, if I look to the sessions that we've run here, probably the largest ones were on senior housing in healthcare and on student housing, for example.
Large sessions for very small sectors.
Yes.
No, indeed, I mean, there's loads of demand. It's on all of the investors' lists. But the volume of those sectors is compared to volume of offices, of residential, is just small. The alternatives are in big demand, but liquidity is very limited.
And is that the case for something like senior living, for example, where you've got an element of student housing now moving into micro-living, co-living, and actually a broadly very similar space for senior living in some senses? Yeah. Is that an opportunity?
For the people that are able to produce that stock, it's a great opportunity.
Absolutely.
Because there's just fundamental demand there, and there's a lack of stock for anyone being able to develop and manage that kind of property. It's a fantastic opportunity. If you just rely on trading existing stock, your opportunities are much more limited, and I think especially in the B cities, it's something.
And it's not only real estate-wise an opportunity. It's also when you look at the ESG regulation. We currently sell a clinic for adipose children, and the first reaction of the investor was, "Cool! I finally have a solution for the S in ESG." And the result is I was able to offer one clinic only, and the investor came back and said, "Listen, we like the developer, we like the operator, and we want to at least have 10 of these clinics." So here's a big challenge for the developer to find suitable sites. But on the other side, and that's funny enough, it's international money, and but they're heavy bullish to buy these clinics, not only to invest money, but also to have an answer to the S in ESG.
Okay, that's interesting to see that coming through, and that's international money looking at that sector. That's interesting. I'm keen to keep this as a sort of 30-minute zip around Germany, which we've covered a lot of interesting topics there. But let's boil that down just into, I suppose, where you're seeing the opportunities, particularly going forward. Given that we're talking about German investment opportunities, we should at least address that. So let's start with you, Gabriel. So where do you see the opportunities at the moment in the German market?
Well, as a residential specialist working the Berlin market since 38 years with Ziegert EverEstate, I clearly see a huge potential in Berlin, the residential market. Berlin is likely to have 4 million inhabitants by 2030, so there is a lot of development to be happening with the current developments. There are expectations that we might need 100,000 to 500,000 more flats throughout Germany. A significant part will be constructed in Berlin as well, with that geographical location. So therefore, investing in Berlin is a good and a very healthy decision at the moment.
Okay. A vote for Berlin. Marcus.
Well, my vote is on two areas. My vote is on income and diversified income. I think German property market offers a fantastic opportunity for income-oriented investments, which are diversified, which are secure, strong tenants, and I think that's a fantastic opportunities. And think a little bit about out of the box, not only going into the core locations, but buying a strong, stable income in B locations. I think that is a fantastic opportunity. And secondly, the other area I see is around development, conversion, redevelopment, driven by ESG and simply upgrading stock and developing new stock. We've seen 6 billion of acquisitions from developers, highest level over the last 15 years. So that's where the opportunities are from my point of view.
Okay, great. Tobias?
I will basically say the same. But you said go to B locations. I say don't forget about C and D locations in Germany, because we have 400 cities all over Germany. And all of these cities have their high street, but they also have their commercial areas. And that's where I would invest in these commercial areas, find a nice, what I call business park building with an office and then a warehouse element. That's where you have the stable income, because these tenants, they're used to paying the rents. They don't see an office space like tenants do in the top cities. So go and find these buildings in C and D locations, not only B. And yes, converting or refurbishing existing buildings and develop them to sustainable new buildings, as we do it in Fürth near Nuremberg, where we bought an old Woolworth building on the high street, and we now change it into, we extended the lease contract with Woolworth, and we will build 80 serviced apartments on top of it. And I'm quite sure that this will be, it was an opportunity for us, and it looks like it will be a nice success for us in 2 years from now.
Great. Thanks very much, Tobias. Thank you, Marcus. Thanks, Gabriel. Really interesting discussion, and thanks for sharing your insights with us today. Thank you for watching on the live stream, and if you're watching this on demand, thanks very much for watching. Thank you, everybody.